Hello and welcome back to Volatility 411. I'm Kevin Davitt, part of Cboe's Options Institute, and it's Monday, October 25th. Now last week, the S&P 500 made new highs and the VIX index fell back to the low end of its post-pandemic range. The markets have been bolstered by earnings, which on average have been beating expectations at a record pace. They will continue this week with reports from most of the big five in the S&P 500. Tesla, however, reported last week. Beyond that, there appears to be some traction on a scaled back infrastructure and social spending bill being pushed by the Biden administration. As legislators move towards some sort of resolution, the markets like the headlines that corporate tax rates would likely not be impacted to the degree previously anticipated. Now, as I sit here, the S&P 500 index is measuring 4550, so it's right at highs. The VIX index is measuring 1576. Now, the term structure for VIX is fairly steep. The front month November futures are trading around 19, so that's more than 3 handles over the VIX index. The December futures are 21, so 2 over November. Now, looking at VIX options, it seems like the standard November 18 puts were spread against the standard December 18 puts. That traded 5,000 times for 2 cents with the November puts over. VVIX, which is a constant measure of VIX options volatility 30 days forward, is back down at 105. Now last week that measure was briefly back at 100, which is essentially the low end for the past 18 months. In other words, relative to the past year and a half, in volatility terms, 1 month VIX options are cheaper than they have been on average. All right, earnings will continue this week with big tech on deck. The month of October will come to a close on Friday for the markets. Congress is working on a potentially big piece of legislation, and COVID numbers continue to improve. That's Vol 411 for Monday. Thank you very much for tuning in.